Good morning, everyone. I'm Andrew, and I don't want to work anymore. And here on my channel, we're going to accomplish that by trading the Nasdaq. So let's jump right into the charts. And actually, we're going to go over the strategy. We trade the first presented fair value gap, an ICT concept. And I've been backtracking this or backtesting this and forward testing this over 93 trades. We got 50 wins, 43 losses, 1,800 points in profit, 53% win-loss ratio, and an average of 19.68 points per day. And then I also have a high yield strategy where I've only been able to backtest it and forward test it over 72 trades, but we've got 39 wins, 55 losses, 6,300 points in profit, and a 54.17% win-loss ratio with an average yield per day of 87 points. That sounds pretty damn good now, doesn't it? Well then, let's move forward. Also, the rules for these strategies is only, so if we're going to take the normal strategy, the first one I was doing, you get one trade. So it's either a winner or a loser, and that's it. No more trades allowed after that. But on the high yield strategy, you're allowed two trades. So if the first one's a loser, you can go in on the second trade. If the second trade's a loser, then you walk away. So those are the rules on that. But also on the high yield strategy, you are entering up to 3 trades. So you're going to stack trades on top of each other at every single, not every single, but when you see another fair value gap forming, you're going to enter in another position on top of that other one. And we're going to go through the charts. Well, we'll see if that pans out today, but yesterday's video was a prime example. If you're watching this video in the future, go look at that would be the March 26th video of 2025 for the details on how that strategy panned out. Also, we can put that aside and we can have a look at our charts here and come up with like a kind of a daily objective here, because we had a huge large range day yesterday to the downside. This is a daily chart, and as you can see, we got this mega sized fair value gap. Let me just draw it out for you here. It was basically like yeah, it was basically this, and that formed on, well, first we had this imbalance, this volume imbalance between Friday and Monday, and then we had yesterday's is this big closure down into that fair value gap that was formed between Friday and Monday. Tuesday was we got bounced around a lot on that day. It was a lot up and down. We got chopped to pieces, and I lost too many trades, not being disciplined, and that's why we have the rules set out here. If you can follow the rules, you're going to be pretty happy with your results. So we've come down into this fair value gap. We still have this volume imbalance here to deal with. So that's this guy right here. We have tapped into it. We'll see. Let's go down into what was I looking at? A 15-minute chart. As you can see, there's that volume imbalance, and we got some fair value gaps down here that we can also think about tapping into today. We got another one down here, something like that. So we got a lot of objectives here on the downside. I don't think we're going to make all new lows, but not this week, maybe next week. We'll see what happens. Hopefully not. I would really like to see it go back up, but we don't make up the rules. It is what it is. We got a 1-minute chart on the left, we got a 5-minute chart on the right, And this is the new week opening gap, or sorry, this is Friday's closing price in orange. These are levels from yesterday. We can remove these now. It's going to delete all these off the chart. We've got some relatively equal lows forming right now. We are about 3 minutes and 15 seconds from the open. So like I said, this is a 5-minute chart, and we need to be aware of, well, we got this gap here to be worried about. I'm gonna move this over so I can get some more runway. Something like that. We got that gap, and then we got one more below it, right about here. Come on. Something like that. So we need to tap into these areas before we can go back up. Not to say that we might not go back up into these gaps as well beforehand, before going lower. So we got this gap, and this one looks pretty juicy as well. Flynn's stirring in the background. He says hello. He's just turning around. Okay, that was what we got. Let's go back to TradingView. Let's get our closing price from yesterday is 20,111. 20,111. It's up here. Right there. We make that one orange. Done. So that's all fine and dandy. That's over there. What else we got? We'll go to electronic trading hours and look at all these. This is London high. Yeah, these are all relatively equal highs. We're going to be taking this out for sure. 20,148. 20,148. Yeah, that's this up here. Easy objective to reach that today, whether we get up there and then turn back around, and then go lower, or do we tap into these guys before doing so? But this will be disrupted, and that's it. We got 10 seconds before market opens. Good luck today, guys. We're going to mark out our opening price, which is right there. We make that one pink. And all we're looking for what is this orange one here? That was the weekly opening gap color. I'm going to change that to I'll make it yellow. Nothing to act on yet, guys. Hope everyone had a fantastic evening. We went and looked at a space to rent for my wife. She's starting a clinical counseling business, and yeah, we put an offer in on a space. So she's gonna most likely get that space downtown Victoria. May 1st. and then we're gonna probably clean it up and like get some new furniture and decorate it, and you know, make it nice and homey for her clients. And we're super excited for that. She's been working on her master's for 2 years. She finished that, and hey, I'm super proud of her. And we're just waiting for our first gap here, which is maybe coming, maybe not. We'll see. Looks a little sluggish. Gotta be ready for a choppy morning after we had a very large range day yesterday. On the downside, we need to anticipate maybe a little bit of chop this morning. So if we take 2 losses pretty early and quickly, we shut the computer off, and that's the end of the stream. And those are the rules, and we're going to stick by them. No more trading like I did on Monday. That was awful. Yesterday was a good day. So now we're coming down, exploring that weekly opening range. We just took out that low here. And we have a gap forming right in here. And we will get ready to trade to go short. 1 contract. Stop loss goes 6 points above this guy. So that is, or 5 points, so that's 671. So we are literally just waiting for this candle to close. We're watching the time up here on the top right hand corner. 10 more seconds. Okay, we're in, folks. Now, so that's the way I trade. I've been back testing the first fair value gap, and the way I do it is as soon as this candle closes, the number 3 candle on the fair value gap, I enter, and I don't worry about the drawdown, because I've noticed there was many days where price just takes off. It doesn't even come back into the fair value gap, and you miss these massive runs. And I don't like not being a part of these massive runs, and I would rather just deal with the drawdown. And I've also found that sometimes it'll retrace all the way back up to the top of the first candle, and then continue lower. So that's why I have 5 points above the number 1 candle, above or below for the stop loss. And so far, yeah, who knows? We will trade this. And all we're doing now is waiting for the next fair value gap. And then we can move our stop, and we can also add another position. We got nothing to worry about right now. We can have a quick look at the stocks. Another red day. Not surprising, since we are moving lower on the Nasdaq, and a lot of these are tech stocks. we might have another gap forming here, but we cannot act on it if the stop loss is still above our initial entry. That is also a rule. Write this down. But I think if we form a gap here, I haven't fully back tested this, but if we form a gap, we most likely can bring our initial stop loss down to reduce our risk in the event that this turns around here. We are now tapping into Friday's closing price. And a reversal and closure above this fair value gap might be problematic. But if I was going to enter here, my stop loss would be above this candle, and we can't have that. So we have to wait for the next gap. But I am going to move my stop loss down to here. So we don't have to worry about that gap. We have another one possibly forming here, which puts our stop loss still at this candle here, which is still above this entry. So that is just too much risk. Okay, we don't have a gap there anymore. But we do have to worry about a closure above this gap. Tapping into Friday's closing price and then reversing is highly probable. Everything still looks good. I think we're going to get another gap here, and then we're going to move our stop loss. I'm watching the top of this candle here. And we're hoping for a gap on this candle. A little slow today. This massive fair value gap is so close. I can't see not tapping into it at this point. It's literally right there. I really wish it told me how many points I was in profit, not just the dollar amount. I would think that would be pretty helpful. I feel like it would be pretty easy for them to do that. it's really consolidating in here. We also got this 5-minute gap forming. It's basically right here. We got a 5-minute gap up here as well. Let's draw it out. Might be something to worry about later, but for us it doesn't really matter that much. That's that 5-minute gap. Yeah, maybe we could go back up there before heading further down. And I think I want to move my stop loss just above it. So we got this little gap here. We're probably going to fill this in now before we can go lower. Just a small little retracement. Not to say that we're not able to go up here, but okay. Now we're getting in the danger zone. Because we formed a new gap here. We disrespected this little guy here. We're going to tap in here for sure, or we can just continue on. And my stop loss might not be safe. Yeah, look at all these fair value gaps that are forming here. This looks pretty bad. If we get a closure above this 5-minute gap, right here, we should close the trade. Yeah, I feel like this gap here is just too juicy not to tap into. Just to turn around right before it. I don't see it. But what do I know? I'm just trading gaps. But already this is looking better. I think we're gonna push down now. Or not. Yeah, looks like we're going up, folks. I will allow it to hit my stop loss, and then I will be ready to take the next fair value gap going up. So looks we're going to get one loss for the morning, which we thought could be expected with yesterday's large range day. We could be chopping around this morning. Causing us some grief. So now we are looking at, this is our first presented fair value gap. We got a new gap that's forming. If we get a closure above here, we will just keep going to the upside. And no harm, no foul. Just like our model says, 54% win ratio. We got this gap forming right here, 36 seconds left on it. I'm gonna draw it out so you guys can see it. This is what I'm looking at. 10 seconds. Okay. $6.51 already. You know, my model says I'm not supposed to close trades earlier, and I'm thinking about Tom Hugard's book, Best Loser Wins. Just be comfortable with the loss. And watch now, we're gonna reverse through here, or we're just gonna keep going up. But anyway, my model does show in the back testing that your initial position is safe 55% of the time. So this action in here, you know, technically is permissible, but you know, if we don't reject off of this fair value gap higher, we're gonna have to just close this trade, and That's going to be 2 losses for the day. Can't be all high and mighty every day. But yeah, I can only trade basically for half an hour before I have to go to work, and we're going to be in this range, and I bet you right after 7 o'clock we're going to break either to the upside or the downside, and that's when, you know, if you can stay on the charts, then you can take advantage and participate in that move using this strategy. But for me, I just can't do that at the moment. So but yeah, because of that large run yesterday, we're going to have a choppy morning, and not much we can do about that. Slow moving, but looks like we're going to go to the upside. I'm going to reduce my stop loss now to the bottom of the gap. Here we go. There's a nice push. Now we've just filled, what's that, 50% of the opening range. This orange line up here being yesterday's closing price. So we got a nice fair value gap opening up here, but we cannot act on it because our stop loss would be below this entry. So we must wait. But we got these relatively equal highs that we're reaching for. And then all this price action from yesterday. You know, if we want to measure, let's see here, the low to the high. We'll grab the fib. High to the low, 68% or 61.1% is going to be in here. It's about 300 points away. We'll see if we can get there. So that's how the model gives you that leniency for 2 losses, because you might get that initial manipulation move at the open and then a reversal. Sometimes you don't, and it just keeps on dumping off to one side. So allowing for 1 loss is why the model allows you to you know, 3 times your money here. Over 3.5 times? I don't know. It's close, right? By trading the second entry. I just haven't figured out if it should be in the opposite direction yet. So if you're going short initially, your second position must be going long, or is it just because you got stopped out and it's still going to go in that direction and there's just too much volatility? But now I'm interested in staying in the move. The P&L is looking nice, and hopefully we can still get another push up. And if we do, we can act on a second position. I have no idea why it keeps on resetting the screen like that. When I push it down, just leave it there. I'm not a fan of the CMC market platform for those little reasons. I know they're minor qualms, but if you guys are watching and listening, fix this trash. So we got 1 more minute till 7. I bet you our 7 o'clock candle will come down into here and then move higher. You know, 30 more seconds. How's the stocks looking now? Lots of red. Oh, Baba's moving. Misty, let's go, girl. Seven o'clock candle. I'm gonna remove this. I don't need that anymore. We're gonna get ready to buy. Hoping for a gap here. If we get a gap that forms here, stop loss goes below candle 1, and then our first position stop loss goes up with that one. So we'll protect the profit of our first position, and our risk will only be on the second. But that isn't going to happen now with this candle's behavior. We just filled in what gap we had. So we must wait a little bit longer. We do need to come in below here for this 7 o'clock candle. Let's see here. What does that look like? Would that be on? That's the new 4-hour candle. Is just starting right now. No, 4-hour candle is not starting right now. The hourly candle. It's come below already. Wow, look at the wick on that hourly candle. Well, folks, we're running out of time. I gotta get ready for work. I'm gonna leave this open, but I'm gonna shut myself down. You guys can, you know, back test this trade and see how it pans out and what it yielded. For me, we're gonna unplug the mic and we'll leave the screen recording for a little bit. I'm gonna see if I can tend to this trade from the kitchen while I get ready for work. And I'll catch you guys tomorrow. Have a good day. How do I just want to hide myself. View, not float on top. Here we go. See you later.